Everybody, we've got another newsletter out for you. Lots of headlines out there, so just want to make sure we're staying on top of things. Make sure nobody's panicking through the negative headlines we see, and kind of go through historically where we've been. What could it mean going forward with all of the volatility that we're seeing in the market? So keep this in mind. This is an important one, often forgot about, that especially when markets are moving up, as we've seen over the last couple of years, that just about every year there's a 5% correction, which is kind of where we're at now in the U.S. market. 95% of years have a 5% or worse correction. 63% of the time it's 10% or worse, and about a quarter of the time you get a 20% bear market style correction in the markets. And again, I've shown other charts of this. That doesn't mean that the markets end negative or end at these levels even, but this is just from the highs that markets can pull back. We saw that last year, almost a 20% correction in March and April of last year, only to rebound and be very positive through the year. So keep that in mind, because it's often forgotten that we get this type of volatility in the markets very regularly. Here's the negative side. So 17 years ago, the great financial crisis bear market ended, and that was obviously big for everybody. Go back to 1950. Here's some of the large bear markets and the average negativity there through that time span. 34, 33% negative through often. Looking at that, you can see the latest one, 2022, markets down about 25%, which we've of course rebounded from the pandemic there as well. Very short bear market, but down just under 34%, whereas that great financial crisis down about 57%. So you can see the average, as mentioned, 33, 34% for these bear markets, the median 33.5. But let's turn that around and see where we're at. Again, 11-year bull market from the time that great financial crisis ended. You can see that in the light blue there. And the average of these generally longer than what we're seeing. You can see in green there the current bull market off those 2022 bear market, only 3.4 years. And put this in number terms, where are we at? You can see that the average much longer, an extra 2 years on the average length of a bull market, sorry, and the average return much higher than we are right now, about 90, just under 95% on that bull market, 3.3 years, the average being 190% and 2 years longer. So we'll see, but that's a good sign that there could be room to go. Here's a chart I showed you last week, but bears repeating here as we continue to move towards the middle of March, which has historically been, going back the past 20 years, the lowest level in the markets on the calendar year. Not to say it's going to time this perfectly, but it is lining up right now that we get this negativity going towards the middle of March. Obviously, some sort of resolution could send the markets going in the positive direction quickly. We'll see if this has any resemblance to what happens through the rest of this year. A lot of talk, obviously, oil prices are through the roof, as are gas prices at the pump. What does that mean for stocks? Often looked at or viewed that it'll be negative for stocks, and we've seen that in the short term with stock prices down and oil prices up. But really in the long term, when oil is up, the markets are up even higher on average, and the win ratio, the percentage of times markets are up, is also slightly higher than when oil prices are down. So keep that in mind as we move forward a little longer term if oil prices do stay up for longer. This just to show again a well-diversified portfolio. So this is the returns from the beginning of the year. Obviously, energy has been very positive with oil prices up. We've heard the story gold and silver over the last little while, so commodity prices up there. But you can see consumer staples, materials, industrials, utilities, emerging markets there, real estate in the top 10, whereas you look at the bottom of that chart, you've got the financial sector, you've got the growthier, the technology names, the NASDAQ tech companies, and just the S&P 500 in total there, which again has that larger exposure to those tech names. all in the negative side. So there's nothing saying that this won't flip and turn around completely over the next day, week, month, year. But a good reminder to stay diversified. Make sure you have exposure to numerous different sectors, numerous different geographies, numerous different asset classes in a well-balanced portfolio that really optimizes these things, and make sure that you can sit through some volatility. You're not going to have everything getting hit all at once. So keep that in mind. And one last chart, a bit of a funny one to look at here, but just a reminder that when prices, which are in blue there, are high, your actual risk is also high. Whereas when prices come down, then your actual risk actually gets lower, despite the perceived risk being the exact opposite. And that's the emotional side of investing. When everything's up, everything's gaining, stock prices are moving up, and this is the same if you're investing in real estate or anything else. The perceived risk is very low because everything is going up and everybody's happy. But the actual risk is relatively high. Whereas when things drop, stocks are at a discount. It's usually because things are going very wrong in the world. Risk seems very high, very hard to want to invest. But your perceived risk is very high, but the actual risk very low. So keep that in mind as we move forward. Again, diversified portfolio helps reduce all of this on the actual risk side. But keep that difference between the perceived risk and the actual risk in mind as we move forward through these negative headlines, because nobody knows what's going to happen, what the next announcement is going to be, positive or negative. And the markets, as I said, even today, moving very quickly from negative back to positive in a day. And by the time you see this, things will have changed as well. So keep that in mind. Any questions, any worries, please let me know. Happy to chat. Take care, everybody.